Okay guys, good evening. Sorry, the upload is a little bit later than I normally do on a Sunday. I had been nursing a broken foot, as I think you're aware from the social media, but it hasn't prevented me from trading this week. I did not trade the tail end of the week. I took my profits on Wednesday at 6% for the week and did not then trade Thursday and Friday. And I believe I'm going to be only on the charts until the middle of next week, hopefully as well, and then call it an end of the year. So effectively what we're looking at now in terms of the weekly forecast, week commencing Sunday, 12th of December, the market's already opened, but give you my analysis playing into Frankfurt and London Open tomorrow, and then for the remainder of the week. So we start on the weekly chart. Effectively, we can see that the market has started to reverse off a nice demand zone that was created off this candle here, which caused a reversal. The market came down, broke structure into it, respected that zone, and is now looking to show a reversal out of that zone after taking inefficient price action within the wick that was left behind here. This zone has now obviously been mitigated. We're looking for bullish bias now for the week ahead, and we're looking for the market to test either 50% of the weekly wick that was left behind from last week, or a shorter time frame daily wick as well, which I'll show you further on. But effectively, we're looking for a retracement into this inefficient price area and then buys out of this for the week to see exactly how market comes and tests previous areas of inefficiency that has been left behind over the last few weeks. When we go down to the daily, we can see a bit of a clearer picture. So we're looking for the market to obviously come down now. It's opened at this point. It's going to retrace, looking for it to target areas of interest that we've got marked up here on the lower time frame, which could be an area of demand that was left behind here on the 30-minute time frame. And then below here, we've got another 30-minute, which obviously has been created previously and has not been tested sufficiently. So we've got two areas of interest, which is a 50% mitigation of the weekly or the daily candle that is left behind on Friday. They're both very, very close to each other. I think in essence, about 4 to 5 pips difference between these two. So we've just set an alert a little bit above that to see what the market does when it comes into this area, how it reacts, to see whether we can get into buys on the way up. When we go down to the 8-hour, we can see obviously how the market's played out. We're starting to see a retracement in Asia, back down into these zones of interest. The larger wicks that have been left behind here shows rejection of the price at the downside, and we're seeing a continuation to the upside now for the market to go bullish. So we're looking for the market to come down, test these areas of inefficient price action that's left behind, see if we get reaction off these areas, and then take the market bullish. On the 4-hour, pretty much the same story. We're just going to look to see how the market reacts over Asia, coming into London Open, and then see whether we can pick up a reaction from around this zone where we've marked our inefficient price areas on the lower time frames to see whether this 1-hour demand gets tested or whether the demand below that gets tested, which hasn't been fully mitigated at the moment, and see whether the market may actually also come down to test this wick that has also been left behind, where we may get a bit of a liquidity grab for these equal lows that are left behind here for the market to then test upwards. So don't jump into any trades initially. Let the market tell you what it's doing and only react once the market has told you which direction it's going in and you've seen the confirmations that you need. So in essence, we're looking for equal highs, equal lows, liquidity grab of that area, and then reversal from that area out with a big volume push to the upside, showing that it's taken price action away from this zone and it's rejecting away, and the market is now changing character to go to the upside. So effectively, we're looking for a retracement down into these areas that we're looking to target, a reaction from either of these zones to take the market bullish for the week. That is my analysis for this week. Again, we're going to keep it under 5 minutes. It's a very, very quick, brief analysis, but it's pretty simple and straightforward. As you go down the time frames, you'll see pretty much the same story is playing out again and again. And we're just looking to see how the market reacts and targets off these areas. Just out of interest, if we kind of let's pull our fib and let's see whether we can see any discounted zones in these areas. Yeah, so it falls very much in line with the 78 and the 86, 88% discount zones. But obviously, we're not going to look at that specifically. We're just going to look to target inefficient price action within the wicks. And this area possibly gets liquidated and we see a lower grab out of this area for an invader candle and then pull out from this zone to go bullish. Okay, guys. Again, as with everything, any questions, please drop them in the YouTube comments or DM me on Instagram. Like, comment, share, subscribe, and share it with people that you feel it may be beneficial to. Have a good trading week and speak to you soon.